In the last episode, we left Donald Trump standing on the edge of a financial cliff. By 1990, the biggest problem in his life was no longer how much he owned. It was whether he still had enough cash to survive. Those are two completely different things. A person can own hotels, casinos, office towers, private aircraft, and luxury real estate worth billions of dollars on paper. But none of those assets can pay tomorrow's bills by themselves. Banks don't care how beautiful your buildings are when the interest payment is due. Employees expect their paychecks in cash. Casinos need cash to keep operating. Hotels need cash every single day. Bondholders expect interest payments exactly on schedule. And, at that moment, cash was the one thing Donald Trump desperately didn't have. What made the situation even more dangerous was that his debts weren't isolated. One loan was connected to another. One guarantee was tied to another. If one payment failed, it could trigger another default. If one creditor demanded immediate repayment, others might panic and rush to protect themselves before it was too late. It was like watching an entire row of dominoes standing on the edge. Once the first one fell, nobody knew where it would stop. By the spring of 1990, the real question was no longer whether Trump was under financial pressure. The question had become much simpler. How much longer could he stay alive? A major payment was approaching. If he failed to make it, the crisis could quickly turn into a chain reaction that neither he nor his lenders would be able to control. Trump had no choice. He had to sit down with the banks. Normally, when someone can't repay what they owe, walking into a meeting with the bank is the most frightening moment of their life. But something very unusual happened inside that room. As the bankers laid out every loan, every guarantee, every casino, every hotel, every office tower, every piece of collateral, they slowly realized something that surprised even them. Donald Trump wasn't the only one with a problem. If Donald Trump collapsed, what would happen to the banks? Let's think about this in simple terms. Imagine someone owes a bank $100,000. If they can't repay it, the bank takes the house, sells it, and tries to recover whatever it can. Painful? Yes. Complicated? Not really. Now imagine something completely different. Instead of owing $100,000, or $1 million, or even $100 million, imagine someone owes billions, not to one bank, but to many different banks. And that money isn't sitting safely inside a bank account. It has already been turned into casinos, luxury hotels, office towers, airline operations, private aircraft, massive real estate developments, each one financed differently, each one carrying different loans, different guarantees, and different lenders. Now, the entire game changes. Suppose one bank suddenly says, "We're done. We want our money back." What do you think the other banks would do? Would they patiently wait? Of course not. They would immediately start worrying about themselves. If they collect first, what will be left for us? Now everyone begins chasing the same assets. Everyone wants to seize collateral. Everyone wants to sell first. Everyone wants to recover their own money before someone else does. But there's one huge problem. This wasn't happening during a booming real estate market. Property values had already started falling. Every potential buyer knew exactly what was happening. They knew these assets were being sold under pressure. And when buyers know you're desperate, they don't offer premium prices. They offer discounts. The more desperate you become, the lower the price goes. That means an office tower Trump believed was worth hundreds of millions of dollars might sell for far less once banks started dumping assets into a weak market. Suddenly, nobody wins. Trump loses, but the banks lose too. And that's when something extraordinary happened. For the first time, Donald Trump's crisis was no longer just Donald Trump's crisis. It had become the bank's problem as well. There's an old saying in finance: if you owe the bank a small amount of money, you have a problem. If you owe the bank billions, the bank may have a problem too. That doesn't mean Trump suddenly became powerful. Far from it. He was in the weakest position of his entire career. But his debts had become so large and so interconnected that shutting him down wasn't as simple as pushing a button. Because once Trump disappeared, the banks would immediately face an even bigger question. Who was going to run everything he left behind? So the banks faced a question they had never expected. What exactly were they supposed to do with Donald Trump? On paper, the obvious answer seemed simple. Take the assets, sell everything, recover whatever money they could, case closed. But once they looked beyond the paperwork, nothing was simple anymore. Let's say a bank takes back a family home. The process is straightforward. Hire an agent, list the property, sell it, recover part of the loan, move on. But Donald Trump wasn't offering houses as collateral. He was offering casinos, luxury hotels, office towers, entire businesses. And that's where the problem began. Imagine a bank suddenly becoming the owner of a casino. The next morning, the doors still have to open. Thousands of employees still expect to be paid. Security has to report for work. Restaurants inside the casino must serve customers. Gaming licenses must remain valid. Marketing campaigns cannot simply stop. Every single day costs money. Banks aren't built to run casinos. They're built to lend money. Hotels weren't much easier. A luxury hotel doesn't generate income simply because it exists. It has to be managed. Staff must be scheduled. Guests have to keep coming. Repairs never stop. Suppliers expect payment. And then there was Trump's airline. Aircraft don't make money sitting on the ground. They require crews, fuel, maintenance, insurance, landing rights. Every hour they aren't flying, money disappears. The banks slowly realized something uncomfortable. Taking Trump's empire away didn't automatically solve their problem. It might actually create an even bigger one, because now they would own businesses they had absolutely no interest in operating. Even selling those assets wasn't as easy as people imagine. Remember the timing. This wasn't the booming economy of the mid-1980s. The market had already weakened. Commercial real estate prices were falling. Investors were becoming cautious. Everyone knew Trump was under pressure. And when buyers know the seller is desperate, they wait. Or they negotiate harder. Or they simply offer far less than the asset is supposedly worth. A building that looked like it was worth $500 million on paper might attract offers hundreds of millions below that. Not because the building had changed, but because the circumstances had. That's when the banks began asking a completely different question. Instead of asking, how do we get Donald Trump's assets? They started asking, how do we recover the most money? Those are not the same question. And once they understood that difference, the solution changed completely. Forcing Trump into immediate collapse might satisfy emotions. It might even make headlines. But financially, it could become a disaster. Because panic destroys value. Fire sales destroy value. Chaos destroys value. If every casino, every hotel, every office building hit the market at exactly the same time, who would buy them? And at what price? The banks didn't want a public auction. They wanted an orderly recovery. That required something they never expected to give Donald Trump: time. Not because they trusted him, not because they admired him, and certainly not because they wanted to rescue him. They wanted time to protect their own investments. That single decision changed everything. Instead of asking, how do we end Donald Trump's business empire today? The banks began asking, how do we keep it alive long enough to recover as much money as possible? It sounds unbelievable, But sometimes, the cheapest way to deal with a man who owes billions isn't to destroy him, it's to keep him alive. And that's exactly where the story takes its most unexpected turn, because the next thing the banks did looked completely irrational. A man was drowning because he had borrowed too much money. So what did the banks do? They gave him more time, and in some cases, more money. At first glance, that sounds insane. But once you understand the mathematics behind the decision, it becomes one of the most fascinating financial stories in modern American business history. Why would a bank lend more money to someone who was already drowning in debt? By now, the banks had reached a conclusion. If Donald Trump collapsed overnight, they could lose billions. So they made a decision that to most people made absolutely no sense. Instead of cutting him off, they kept him alive. And in some cases, they even agreed to provide additional financial support. At first, that sounds completely irrational. A man was drowning because he had borrowed too much money. So the solution was to lend him more? No, that wasn't what was really happening. The banks weren't giving Donald Trump a second chance because they believed he would magically turn everything around. They were protecting something much more important: their own money. Let's imagine a simple example. Suppose someone already owes you $1 billion. Now they're only $50 million away from total collapse. You have two choices. Option 1, you refuse to help. Tomorrow they default. The hotels stop operating. The casinos begin falling into bankruptcy. Properties are dumped onto a weak market. Every creditor starts fighting for whatever remains. And suddenly, nobody knows how much of that original $1 billion will ever come back. Maybe 60%, maybe 40%, maybe even less. Now, consider the second option. Instead of walking away, you provide enough support to keep the business alive a little longer. The hotels stay open. The casinos continue generating revenue. Employees continue working. Customers keep coming through the doors. Instead of selling everything in panic, assets can be sold one at a time. Loans can be renegotiated. New buyers can be found. If spending another $50 million today helps recover hundreds of millions later, was that really a bad investment? Suddenly, the decision doesn't seem emotional anymore. It becomes mathematics. Cold, unemotional, financial mathematics. This is one of the most misunderstood moments in Donald Trump's entire business career. People often say, the banks saved Trump. That statement is only half true. The more accurate version is this: the banks weren't trying to save Donald Trump. They were trying to save the billions of dollars they had already put at risk. Trump simply happened to be standing in the middle of that money. If he disappeared overnight, the money might disappear with him. That is why the negotiations in 1990 were so different from an ordinary loan meeting. The banks weren't asking, "Do we like Donald Trump?" They weren't asking, "Do we trust Donald Trump?" They were asking one question: which choice costs us less? Sometimes, in finance, the least expensive solution is also the most surprising one. And that's exactly what happened. In June 1990, after weeks of intense negotiations, Trump reached an agreement with a group of his major lenders. The deal wasn't a victory, it wasn't a miracle, and it certainly wasn't a bailout with no strings attached. The agreement bought time. Nothing more, nothing less. The banks agreed to restructure parts of his obligations. Certain payments were delayed. Emergency funding was arranged to keep critical operations running. Creditors coordinated instead of rushing to seize assets independently. Why? Because acting together gave them a better chance of recovering their money than acting alone. It wasn't generosity, it was damage control. The headlines focused on Donald Trump. But behind closed doors, the banks were trying to prevent a financial fire from spreading into something even larger. And that's the part many people never hear. Donald Trump wasn't sitting at the negotiating table because he had all the power. He was sitting there because everyone involved knew that a chaotic collapse would likely hurt every single person in the room. For a brief moment, their interests overlapped. Trump needed time to survive. The banks needed time to recover their money. Both sides wanted the same thing, but for completely different reasons. Yet there's something else that almost never gets mentioned. Buying Trump more time didn't mean giving him back his old life. The banks had no intention of handing him a blank check and saying, "Go build another casino." Those days were over. If Donald Trump wanted to survive, he would have to give up something far more valuable than money. He would have to give up control. And for a man who had spent his entire career making every decision himself, that may have been the highest price of all. The agreement with the banks gave Donald Trump something priceless: time. But time came with conditions. The banks hadn't rescued him, so he could go back to doing business the way he always had. Those days were over. For years, Trump had built his empire through expansion. If he saw a luxury hotel, he wanted to own it. If he saw a casino, he wanted to build an even bigger one. As long as banks were willing to lend, the empire kept growing. Now, everything had changed. The man who had once made every decision himself suddenly found that many of those decisions no longer belonged entirely to him. The banks wanted answers. Which assets could be sold? Which debts had to be repaid first? Where was every dollar of cash going? How much could Trump spend? How much could he afford to lose? For the first time in years, Donald Trump wasn't simply running his business. He was being watched by the very institutions that had once financed his ambition. Outside the boardroom, the giant Trump signs still stood on hotels and skyscrapers. Newspapers still called him a billionaire. To the public, he still looked like one of America's most successful businessmen. But inside those meetings, the conversation was completely different. The question was no longer, how rich is Donald Trump? The question had become, how much cash does Donald Trump actually have left? That difference changed everything. To survive, Trump had to start giving things up. Luxury assets were sold. Businesses were restructured. Projects were renegotiated. Some ownership stakes were surrendered. Control over parts of his empire slowly slipped into the hands of creditors. He wasn't rebuilding his empire. He was trying to keep what remained from collapsing. And yet, the crisis wasn't over. Many people today believe one of two things. Some believe Donald Trump never went bankrupt. Others believe he lost everything. Neither is true. The reality is far more complicated. Donald Trump himself did not disappear into personal bankruptcy, but several of the companies that carried his name entered Chapter 11 bankruptcy protection. The most famous example was the Trump Taj Mahal Casino in Atlantic City. When it opened, Trump called it the eighth wonder of the world. It was enormous, luxurious, covered in gold. It represented everything the 1980s version of Donald Trump believed success looked like. But behind that spectacular building was a mountain of debt. To finance the project, roughly $675 million in high-yield junk bonds had been issued, carrying interest rates of around 14%. 14%. Think about that for a moment. Before the first customer sat down at a blackjack table, before the first slot machine paid out, before the first hotel guest checked in, the interest meter was already running. The casino didn't simply need to perform well. It had to generate extraordinary amounts of cash just to service its debt. That became impossible. In 1991, the Trump Taj Mahal entered Chapter 11 bankruptcy protection. Creditors agreed to restructure the debt, but they demanded something in return. Trump surrendered a significant ownership stake in the casino as part of the restructuring. Later, other Trump casino businesses would also go through similar restructurings. So, did Donald Trump go bankrupt? The most accurate answer is this. Some of his companies did. Donald Trump himself survived. That distinction matters because the banks were never trying to prevent every bankruptcy. They were trying to prevent every bankruptcy from happening at the same time. Instead of one massive explosion, the damage was spread out. One negotiation at a time, one restructuring at a time, one asset at a time. Trump lost properties, he lost ownership, he lost control, but he did not lose the opportunity to keep playing the game. And that's where this story takes its most unexpected turn. Looking back years later, the most valuable thing Donald Trump kept wasn't a casino, it wasn't a hotel, it wasn't an office tower, it wasn't even a piece of real estate. It was his name. Buildings could be sold, ownership could be reduced, debt could be restructured. But the name, Donald Trump, still attracted headlines, still attracted television cameras, still attracted public attention. Most businessmen disappear after a financial disaster. Trump became even more famous because of his. Without realizing it at the time, he was beginning to discover something that would eventually transform his entire business model. Maybe his greatest asset wasn't what he owned. Maybe his greatest asset was who he was. Years later, that realization would lead to a completely different strategy. Instead of borrowing billions to own buildings, others would build the towers. Others would provide the money. Others would take much of the financial risk. Donald Trump would provide something else. His name. The name became the product. And that idea was born from the darkest financial crisis of his life. So let's return to the question we asked at the very beginning. Why didn't the banks let Donald Trump collapse? The answer was never loyalty, it wasn't friendship, and it certainly wasn't because the banks believed Donald Trump could never fail. The answer was much simpler. Allowing Donald Trump to collapse immediately would likely have cost the banks even more money, so they bought him time. The creditors recovered what they could. Trump surrendered assets. His companies entered bankruptcy restructurings. Everyone paid a price. But Donald Trump remained at the table, not because he had won, but because he had survived. And sometimes, survival is enough to change history. Coming up in episode 3, Donald Trump had escaped financial collapse, but escaping debt was only the beginning. His empire had been shattered. His reputation had been questioned. His lenders no longer trusted him the way they once had. So how did a man who nearly lost everything reinvent himself and eventually become one of the most recognizable figures in the world? That is the next chapter of the story. Thank you for watching. See you next time.